Day 2 of the 2013 PSG Conference at Sun City has come to an end, and we've saved the best for last, or certainly the biggest for last. With me is the CEO of Santam, South Africa's largest short-term insurer, Ian Kirk. Ian, you spoke earlier just about the fact that insurers are not pricing for the risks they're taking on because it's highly competitive and there has been an absence of natural catastrophes. You said that on that note, underwriting needs to be future-focused rather than backward-looking. What does future-focused underwriting look like?
Okay, the issue is that the industry is not achieving sufficient margins at the moment for the risks that we're taking on. We are unable, particularly on the intermediated model, which is a bit slower to respond to conditions. A number of reasons for that, but absence of natural catastrophes up until the final quarter of last year was certainly one of those. And the claims ratios were quite good and quite acceptable. So we weren't pushing through the rate increases that were necessary. So we were gradually sliding. That's hurt us now in the final quarter of last year and the first quarter of this year. So the industry is not earning the margin that it needs to service the capital on behalf, and that's not a good situation. So we need to attack it in a number of areas. We obviously need to move the rates up, but there's a limit to how much you can do that and over what period. You have to be selective about that. Consumers, particularly on the personal side, are under pressure, companies' earnings, all those things. So there's a limit to how much we can do that. So what we've got to do is look at the other drivers of profitability, which is the cost of doing the business, our own management expenses, and also the claims cost. So we need to attack it, which is particularly problematic, as you know, in the motor account because of the rand. Now, when I talk about future focus versus backward focus, we have a tendency in the intermediation model to look backwards and we say, look, the loss ratios are 56, 60%, 70%, everything is fine. But that doesn't reflect the future. It doesn't respect your exposures and the way your exposures have grown and changed with climate change and all sorts of other things. And it also doesn't take into account that when you pay your claims, you're going to be paying on the motor account with what are very expensive euros and sterling. So we need to look forward as opposed to just backward in the underwriting process. We need to be more responsive. We can't just look at the past and say that's going to be a proxy for the experience moving forward. It won't be.
In 2012, you mentioned that Santam paid out 13 billion rands worth of policyholder claims, and you have experienced some fairly large losses on your agriculture book in the first quarter of this year. Are you concerned about Santam's own underwriting margin, and what, if anything, will you be changing in underwriting going forward?
No, look, I mean, Santam's been around for 95 years. We've experienced situations like this before. I'm concerned about the industry's position and, of course, our own position. It's not where we want it. We're taking action to resolve it. But we can only take action with the assistance of the intermediaries. We need to work together at the factors that are driving the profitability and move it up over a period of time, given the pressure that consumers are on. It's not just about premium rates, it's about the other drivers of profitability as well. Retention of business, managing the claims cost down, increasing the efficiency of our own operation. We can't just fix the issue with premium increases on a sustainable basis.
Of course, the big announcement was made earlier today about the merger of Hollard and Etana. What are your thoughts on that merger, and what impact do you think it will have on the industry?
Look, it's a bit early for me. I haven't really studied it. I can see the logic for both businesses. It seems to make sense. They were associated in the past. I think they had to do something. They couldn't continue with the arrangement that they had. With one is owning 40% of the other and in the same market, it was difficult. So I think they'll have challenges. I presume that they have to go through the regulatory approval and competition and whatever. Really, the people to ask, I think, are the intermediaries. Hollard has a big intermediated business as well as a direct business. Etana, as I understand it, is largely intermediate, in fact, almost exclusively intermediated business. So I'm sure they've tested that and the reaction of the intermediaries. And, of course, there's people issues and stuff like that. So, yeah, I can understand the logic. Takes one more competitor out of the business. But it also makes still a very competitive environment, for us. Yeah.
Sorry, I was going to say it also makes Hollard much larger and a much stronger competitor. Are you at all nervous for that competition?
Look, size is not the issue. Yeah. For us, that really isn't a factor. It's the quality of the businesses that we're competing against. And both those businesses are quality businesses, as are other competitors. So we work in a very competitive space, and we play our game. The others will play their game, but we focus on our game.